It's a budget for Bharat as Finance Minister Arun Jaitley unveils massive outlays for rural infrastructure and universal healthcare. Presenting the last full-fledged budget, the Finance Minister announces a big hike in support prices for food grains, even as he gives a big push to food processing.
The market's worst fears come alive as long-term capital gains tax makes a comeback. Stock market gains of over 1 lakh crore rupees will now 1 lakh rupees in fact will now be taxed at 10%. Short-term capital gains tax and STT remain. Market feels the jitters only to recover smartly towards the close.
Some giveaways on the fiscal deficit front as Jaitley resets the fiscal deficit target for the current fiscal to 3.5%, shifts the target for the next year to 3.3 percentage point. The government's divestment drive gathers momentum, with the Finance Minister looking to raise up to 80,000 crore rupees from the sale of stake in state-owned companies next fiscal.
Big cheer for medium and small enterprises as the Finance Minister extends the benefit of lower tax to more companies. All companies with a turnover of less than 250 crore rupees will now be taxed at 25% compared to the earlier 30%. Jaitley says 99% of corporate India will now get the benefit of the lower tax rate.
It's a token relief for the salaried middle class. Standard deduction makes a comeback with a relief of 40,000 rupees. Back of the envelope calculation shows the gains will be limited as the transportation allowance and medical reimbursements get subsumed.
Modi government's big push on the infrastructure sector continues. Budget 2018 sets aside almost 6 lakh crore rupees to boost public infrastructure development. Economists say the higher outlay will help revive economic activity across sectors. Rural India to gain the most.
Budget 2018 will improve the ease of living in a big way, says Prime Minister Modi. Also insists the 500 crore rupee allocation will give a big boost to vegetable production. Asserts that the 5 lakh rupee health cover is one of the largest universal health schemes in the world. It is now being called Modi Care by his man.
It's budget day. You're with ET now. I'm Sandeep Gurumurthy. Joining me is Supriya Srinath as we build up to the mega coverage of our mega primetime coverage of budget 2018. It's budget for Bharat as the election season kicks in, unveiling its last full-fledged budget under the Modi government. Finance Minister Arun Jaitley announced massive hikes in outlays for the rural sector, including a universal healthcare plan for the needy. Finance Minister says under this, nearly 50 crore poor people will get hospitalization benefits of up to 5 lakh rupees without providing for this massive expense. Public infrastructure gets top billing too, as the total outlay has been hiked to almost 6 lakh crore rupees. For those who are wondering where the money will come from, there are small giveaways on the fiscal front, with the fiscal deficit target tweaked to 3.5% for FY18 and 3.3% for the next fiscal.
Indeed. Now, it looks like the government has taken the middle class for granted this time around. There is precious little for them except for a 40,000 rupee standard deduction. From the market's point of view, investors' worst fears have come true, with the long-term capital gains making a comeback. All investors with capital gains of 1 lakh rupees and above will have to pay 10 percentage point tax. What's more, there is no change in the securities transaction tax, and that remains as well, which stays at 15%. There is something to cheer for India Inc. Smaller companies with a turnover of up to 250 crore rupees will now be taxed at 25% instead of the 30% earlier.
Okay, we've got a power-packed panel joining us on the budget debate to kick things off. Dr. Rajiv Kumar, Vice Chairman of Niti Aayog, will be joining us in moments from now. We've got KIran Mazumdar Shaw, Chairperson of Biocon, Deepak Parekh, Chairman of HDFC, and Maithili Busumata, Consulting Editor and in-house economist as well, joining in with their perspective. Let me start with you, Mr. Parekh. Do you agree with our assessment of the fact that this is in some ways a budget for Bharat ahead of the election season?
See, it may be the BJP's last budget, but I personally feel the need of the hour was to uplift the poor people and bring them into middle class. There are a large number of Indians who are in the lower middle class and the EWS, and mainly in the rural areas. How do we bring them up? How will we uplift them? And that is the emphasis of this budget, that create more equality amongst Indians and try and help the downtrodden, try and help the poor farmer who is not getting a good price for his produce, who is not getting adequate infrastructure support on logistics. How do we help them to overcome this? And it's a very good, I think it's good, well directed towards that lot of people, because we need to bring them up.
All right, we need to revive demand, and this may indeed be BJP's last full year budget as far as this term of the government is concerned. But KIran Mazumdar Shaw, you're always plain speaking and you're always candid. It's only fair I ask you, a budget with an eye on elections, is it a please all budget?
Well, I think certainly this budget has basically addressed every sector and every section of our country. I think if you look at the most important announcement as far as I'm concerned is definitely the National Health Security Scheme, that Health Protection Scheme that they have announced, which is really about universal health care, which is, going to be rolled out to almost 40% of our population and to the poor and vulnerable sections of our society, which I think is a great move. I think what is important is to make sure that this is implemented sooner than later, because already the signals being given are that it's going to take almost the entire fiscal FY19 to actually get the insurance scheme in place, and they've allocated about 2,000 crores, which is very small. It is not enough to basically roll out such a major scheme. So I just hope that at least they roll out this scheme to make sure that they deliver on this objective. It's a very fine objective. I think it's long overdue, and it's something which I welcome.
Let's bring on board Dr. Rajiv Kumar, Vice Chairman of Niti Aayog. Dr. Kumar, appreciate you joining us right here on ET now on primetime coverage of budget. We just got opening comments from Deepak Parekh and KIran Mazumdar Shaw. Both believe it's sort of a balanced budget, but let me get your view in. Given the rural stress that we've seen, would you agree that this is an election budget that tries hard not to be populist, but has its eyes fixed on rural India?
This talk about an election budget or not an election budget is a bit strange to me. These days voters reward delivery. These days voters reward performance. And what the voters are now looking for is an economic growth rate which is higher than before, which is generating jobs, which will take India onto a higher trajectory of 8% growth. And I think this budget firmly lays a very firm foundation for that. And why do I say that? Because all these 7 decades that we've had, it is our rural sector which has been the laggard sector. 50% of people employed there, producing 16% of your GDP, huge volatility in their output. I mean, that's the most volatile sector that you've got. Still 40% rain-fed, 47% rain-dependent agriculture, etc. And this budget puts the rural sector front and square of economic policy making and fiscal allocation by allocating 14.34 lakh crore and bringing 4 ministries in tandem, in coordination with each other, to say that look, all you guys have to work together to get this agricultural sector out of its backwardness and get the farmer's income in line with what what the urban incomes are, so that he doesn't feel left out, he's not left out, and he comes out of his distress. Once rural incomes begin to rise, and once rural incomes are on a sustainable path and a growth trajectory, the rest will actually follow, because that is where the demand will come from, that is where massive productivity increases will come from, that is where you will get extra labor which will be released from there to get absorbed into the high productivity sectors. So that's the basis. That's one of the huge, this is why I call it in fact a path-breaking budget. Yes, it is of course an electoral budget because it will promise higher growth to the people and higher employment. And for employment, then the second question, which other budget made it so frontally clear that the government will will absorb the 12% of EPFO for all new additional employment across all sectors. That's what the finance minister said. Here is a budget which is admitting to the fact that our surplus labor economy has been converted into a high labor cost economy, and they want to change that. And they are switching from a regime of capital subsidies to labor subsidies so that employment can be maximized, employment can be generated.
Dr.
And finally, the huge amount of extra expenditure on the social sectors. Those are the three big features which are all growth enhancing and job creating.
Dr. Kumar, I have a very direct question, and I will take into account all of that you've said. We will go step by step and discuss some of those issues with you. But the government has promised at least 50% rise on investments in agriculture. Now, according to experts like Ashok Gulati, who've been part of bodies that have been mandated to recommend the MSP, he says this promise is at best vague, at worst impossible, because it hasn't been clarified what is the cost being referred to. He alleges crop patterns will get distorted, diversification will go for a complete toss. He alleges if you haven't increased MSP in the last 4 years, how do you think you're going to do it in the last 1.5, 2 years? That's the allegation from somebody like Ashok Gulati, a responsible voice there. How are you going to respond to this?
Ashok has been the president, has been the chairman of the Commission on Agricultural Costs and Prices himself. Under his regime, we had seen a substantial rise in the MSP for pulses and lentils, which then led to an increase in those output. And he has been always advocating a rational increase in MSPs, but an increase. And because of the MS Swaminathan committee's recommendation, and it was very clear, that recommendation, there is no ambiguity about it. It said the minimum support prices must afford a 50% profit margin over the cost of production for every crop. Now that cost of production for that crop is the job of the Commission of Agricultural Costs and Prices to do, and they do it. They do it every year in a very sophisticated manner. And what the government is now saying is, yes, we will have all the kharif crops, and not yet, they're not included, all the kharif crops will get that Swaminathan committee award. Now, for all the rest of the economic that Ashok is talking about, and we have discussed this on several occasions, the MSP increase is but only one component of the huge agricultural package that's been announced by the finance minister. That includes Operation Green, that includes connecting APMC markets to ENAMs, that includes the Rural Infrastructure Fund for which 2,000 crore has been given, that includes creating clusters of farmers to overcome the fragmentation of land and to improve and to get horticulture and fisheries and everything else in it. So you see, but the major point, which I hope Ashok himself will concede and recognize, is we are shifting focus from agricultural production to improving farmers' income, to improving rural livelihoods, to improving rural incomes. And that's the big focus, and that's the big shift. And that shift is most scientific and high time coming. And this is what I've been arguing for, and I am so glad that I've in fact recently had written a note on this, on a new approach to agriculture, and I'm thrilled to see that this new approach is being adopted.
For you, and this is that while we're very happy to see that the government has taken your advice on fiscal deficit and treated it a little pragmatically, the fact is that you've also been a very ardent votary of lowering the revenue deficit, and that has not happened. On the contrary, we're ending this year with 78% of the fiscal deficit accounted for purely by revenue deficit. Does this distress you?
It doesn't make me happy, I must confess. But this is something that will take time to address, because we have been living with this for a very, very long time. It's not something that we can do achieve overnight, and not especially in this condition of a significant revenue stress that we face, because we are getting only 11 months of indirect tax revenues, etc. So, but I know that this government is committed to accountability, and I can say this to you guys, which is that we have in Niti Aayog prepared an outcome-based performance budget, which will lay down the outcome targets for all 740 budget lines, and this will soon be announced. And that's the kind of accountability that we want to bring into the fiscal process. Once that happens, and once the fact that the CGAs, there's the public finance, the computerized system, PG, I forget the exact title, PRM actually, yeah, PRM, the public revenue mechanism is there, that accountability will begin to bring down the revenue deficit, but it will surely take time, because this is something that we have inherited for the last 7 decades.
It's very important to get the revenue deficit down, but what somewhat distressingly, the FRBM amendment bill, which is part of the finance bill, actually proposes to do away completely with the revenue deficit. So in future, it argues that there is no need whatsoever to target a revenue surplus, and there is just no need whatsoever to give figures of the revenue deficit. So would that not be amounting to a little bit of fudging perhaps?
I'm not sure. I don't think so, Maithilis. I think there are many ways. Let me widen this thing to say there are many ways to bringing down the revenue deficit. You know how large a part of revenue expenditure is the interest income. So I think about 27–28%. Now that could be lowered, that could be reduced by much more efficient management of our debt overall. So what we need therefore is a debt management office, which has been promised many times, which has been also announced once. And I think it is high time that we get that, because we could swap high cost debt with the low cost debt. I mean, there is a huge scope at the moment of doing so between internal and external debt, etc. We could, the debt management which has become the sort of the prerogative of the RBI, I think needs much more looking into. So that's one point of it. The second question, of course, is that the revenue deficit will go away as the revenues within GST begin to rise. The Finance Minister talked about amazing buoyancy of 2.1 on the direct tax side. I can assure you that going forward, as more and more sectors get within the GST, and we get many more people filing the returns, you will get an amazing buoyancy, and that will also take care of the revenue deficit. So revenue deficit is not necessarily all about cutting expenditures. Also that, yes, we need to rationalize those, but this government is committed to that, and committed to overall efficiency and accountability. And that assures me that the revenue deficit will also be tackled in the coming years.
Fair enough. I don't want to obsess too much about fiscal deficit, but do want to get a quick reaction from industry. Deepak Parekh, fiscal deficit for FY18 at 3.5%, and more importantly, the target for next year has also been relaxed. So, in a sense, are you disappointed, even though ratings agency Moody's has not made too much of a big deal out of it? They're saying this is in line with expectations. Are you disappointed that it's not going to be met, or do you believe it's not a big deal?
I'm not disappointed at that, because you have to take it that last year, the year is an exceptional year with major reforms that were undertaken, and even GST collection, he emphasized that it is 11 months. And so I'm not disappointed. It's not worsened. It is the same as the previous year, and in some areas he said that the disinvestment target will be exceeded from 72,000, could get to 1 lakh crore by March this year. And if the growth is there, and if we are achieving or aiming to go back to the 8% growth, you can manage a fiscal deficit. And he has said, he is committed that next year it will be 3.3%, the fiscal deficit. I'm not disappointed at that, at the fiscal deficit at all. In fact, if you ask me, last year's budget was an affordable housing budget. This year's budget is rural development and farm budget, agriculture budget. And again, a huge amount of emphasis how to improve the farming lot, how to improve the poor farmers, how to give them medical insurance, how to give them better healthcare facilities, and how to spend more money on infrastructure, connectivity in the rural India, health, education. I think he has stressed that, and that is absolutely the need of the hour. We have to bring more people from lower middle class, economic weaker sections above. And he has tried to do that by putting a huge emphasis on the right set of things, like increase in farmers' income by 2022, and spend more money on irrigation, spend more money on organic farming and process food manufacturing. So I think the emphasis is right.
All right, so his emphasis is right, and he's really looking to broad base and address some part of the rural pain. But I think as far as the pain of Indian industry is concerned, it's only fair, before I go back to Dr. Rajiv Kumar, I take a quick question with KIran Mazumdar Shaw, who's also right here with us on the show this evening. And Ms. Shaw, as a member of Indian industry, are you disappointed that the finance minister has not kept his word on lowering tax for the large corporates? He's of course squandered the opportunity. Many believe he's done it for the smaller guys with turnover of up to 250 crore rupees, but it is the big guns like you who generally generate the big kitty as far as corporate tax collections are concerned. Do you stand disappointed today?
So it's not so much about disappointment, it's really about the fact that we are now a part of a global ecosystem where corporate tax rates are being lowered. We need to be competitive. That's where I worry that, it's not about, big corporates in India wanting a lower tax rate just because of, the optics of what the government has announced in the past. But more importantly, I think government should look at keeping us competitive. And I think that's where the whole issue is. And you need reinvestment in the business. Today our investments are at an all-time low. We don't have enough brownfield projects, we don't have enough greenfield projects, and companies need to be incentivized to at least, retain more cash through lower corporate tax so that they can reinvest. They could have even, linked the lowering of tax rate to redeployment of capital into the business. Investment, any capex investments could actually have been linked with a lower tax rate and so on and so forth. So I think there is an urgent need to revive this investment climate.
Right. Coming on that, Dr. Rajiv Kumar, you spoke about the fact that the budget marks a tectonic shift from capital subsidy to labour subsidy, and that's a point well taken as far as intending to create more jobs in the organised sector. But from the larger theme of reviving investment cycle, is there enough in the budget to be able to do that? You of course realize that investment as a percentage of GDP right now we are at what, 27%, 28.91% in the second quarter of this financial year. And it's trending lower. So do you believe there's enough in the budget to kickstart private investment?
Well, to begin with, I must say, with due respect to Mrs. Mazumdar Shaw, that the big corporates' effective tax rate is only 22%. And that's very well known. It's not 25. So that's the overall tax rate that there is. So that in that sense, that is not. But and to compare ourselves with the developed economies where we can and say that we need 15 or 17% direct corporate tax rate, I may be a little far-fetched. But the second thing is that I had heard all along that the competitiveness of our large corporates depends much more on the availability of power, on the availability of good infrastructure, on the reduction of transactions costs, on ease of doing business, to give them more flexibility in labor so that they could hire contract labor, to get the real wage cost of labor down. And I think all this budget is doing all of that. I mean, the speed at which the physical infrastructure is being expanding, the commitment to get power, at the rate at which it is been expanding, all of that. Plus, as I said earlier, I mean, India, after all, is not yet become an export-driven economy. It will depend on domestic demand, and by raising the incomes in the rural economy, that's where the corporates will get the huge demand boost. for which they can then expand their capacity. And for you, Shiv, let me say that the investment is not any longer on a declining trend. The credit offtake to industry was 4.6% in November 2016. It has risen to 8.8 in November 2017. Last month, December, it was 12.8%. So the investment cycle is picking up, and this is why I think the investment sentiments are beginning to perk up, and they'll get perked up further because of what this budget has announced.
All right, fair point. It's beginning to perk up what the budget has announced. So let's find out from people who will be investing. Deepak Parekh, do you believe enough has been done in the budget to revive the private investment cycle? It's been stalled for a while, but Dr. Rajiv Kumar here says there are early shoots that we're going to see, and perhaps the budget will be a flywheel. Do you agree?
Well, spending on healthcare, spending on education, spending on roads, on railways, I think that infrastructure spend will really revive the capital spend. And you know, if you see actually, if to be fair to the government, the worst is over. I am 100% convinced the worst is over. We are on an uptick at the moment, and all the major structural reforms have been over. Difficult decisions have been taken last year. We are the fiscal deficit and the growth levels have been impacted because of these difficult decisions, but absolutely necessary decisions. And I see a pickup in investments. I see much improved results of the companies that are coming because this is the results season, and I am extremely optimistic about the next few years.
Rajiv, I can turn now to the GDP assumptions underlying the budget. The government has assumed an 11.5% nominal growth in GDP, that is 7.2% real growth and just 4% inflation. Given that oil prices are on the uptick, and given that the MSP price increase along with the concomitant food subsidy increase by 30,000 crores is bound to push inflation beyond 4%, is this assumption of 11.5% reasonable? Or will it end up that inflation is higher and the real GDP growth is lower? Rajiv?
Well, you know, Maithili, you have often had situations where both are higher. Actually, if you look at the period between 2003 to 2011, you had inflation running at 7-8%, and you still had growth of 8.5%. So you know the two are not entirely correlated. So while you may be right about inflation becoming a little higher because of oil prices, but you know I think the growth estimate is a real underestimate. I would have put it at 7.5 and more, and I'll bet my bottom dollar that it will be higher than 7.5 in 2018-19. On the inflation side, you know the food inflation is still at 3.2%, and you also know that it has been a surprise to everybody that oil prices have remained where they are, and I hope that soon after Saudi Aramco's listing, which has been pending for a while, and I've been on the board of their big think tank, I hope this world oil price scenario will change, because maybe that is the contingent factor that is holding that back, and the US shale oil is not coming to the market. So I am one who is not looking at a prolonged period of oil hardness in oil prices, and I am also therefore not one who is looking at a sort of a uptick in our overall CPI going forward. But nonetheless, I had argued, I can tell you the secret, I had argued to assume a 12% rate of growth in nominal GDP based on a higher GDP growth. And I assure you, I can't assure you, but I think that will come through.
Oh yes, 7.2% for next financial year is a little conservative. One will have to argue. You yourself, joined us in the economic survey and indicated that we could be growing upwards of 7.5%, maybe even 8%. But Ms. Shaw, I have to ask you, since you represent the healthcare industry, your reaction to what is being called Modi Care now, at least in the political circles. How do you read that scheme and the premium that's needed? Where is that going to come from? Not much allocation as such for now. How do you expect this to be rolled out? Are you concerned that on execution issues when it comes to this particular healthcare scheme?
Yeah, so I think if you really just do a back of the envelope calculation on the kind of premium that you need to cover 5 lakhs for 100 million families, you know, it's roughly about 10,000 crores minimum. The government believes that they might get a reduced premium because of the huge numbers involved, and so they reckon it will cost about 5,000 crores or thereabouts, and so far their allocation is only 2,000 crores. So they believe that in the first year, because they will be in a very early stage of the rollout, they believe they don't have to incur more than 2,000 crores, but there's where the problem is, which means that we are going to see a very small rollout of this particular health insurance, or you know, this universal health care. So you know, that really is the big concern, that how soon can this be rolled out, because according to me, you know, covering health care for a large part of the population is going to be a key enabler for inclusive economic development. Without health coverage, believe me, you cannot move the needle for inclusive economic development. Health and education are the two pillars which will move the needle, and we need to see significant investment. Therefore, I welcome this universal health care.
All right, Dr. Rajiv Kumar, I wanted to come in on that. The numbers like KIran Mazumdar Shaw is pointing out there, perhaps the assumptions being made are that volumes will ensure the premiums will be lower because the allocation is just about 2,000 crore rupees. How are you going to justify an ambitious scheme like this? And having said that, I think it's a scheme that India definitely needs.
Yeah. Supriya, I must, you know, I'll answer this, and I have to say that I'll have to then move on. I have my very senior colleague, Dr. Paul, actually sitting here with me at this point of time, and he's been leading this effort for the last 5 months. And he will assure Mrs. Shaw, he's a leading pediatrician from AIIMS, who is a member of Niti Aayog, and he can assure Mrs. Shaw that we will surely get lower premiums than what she's thinking of, and the cost of this scheme will be nowhere near 10,000 crore, it will be below 5,000 crore as she has heard. And then, you know, so, I mean, if somebody has given her this rollout figure of 2,000 crore, I think the Revenue Secretary has done that, then one, she might be, both the Revenue Secretary and she may be very pleasantly surprised as to how quickly we may roll out this scheme, because there has been a lot of preparation already undertaken in Niti Aayog in conjunction and collaboration with the Ministry of Health. But the second thing that I wanted to show, put to her is that even if it is 2,000 crore for this year, it still covers 40% of the families that we're talking about, and that's still a 40 million households. And now that's not a small number by any stretch of imagination. And you know, to cover, and if you cover those 40%, you have covered everybody below the poverty line, and that's where you want to begin, because that is where they are the people who are the most afflicted, the most deprived, and the most vulnerable. So let's not criticize a scheme, you know, because you know, let's not nitpick on this one. We will do this. The government has announced it. They fully funded it by the additional 1% cess that they've raised, which will cover both education and health. They've increased the overall health budget from 46,000 to 52,000 crores. It will be fully funded, and implementation will be, I think, a pleasant surprise, because that is the strong suit of this government. But even if it doesn't happen, and it covers only the families below the poverty line, even that is a huge step and a transformative step I might submit to you. And with that, may I thank you very much and leave.
Thank you, Dr. Kumar.
Thanks for time.
Thank you, Dr. Kumar, and thank you, Ms. KIran Mazumdar Shaw and Mr. Deepak Parekh and Maithili for joining us. The first leg of the budget debate right here on ET Now. We'll slip into a short break here. On the other side, we'll be joined live and exclusive by Commerce and Industry Minister Suresh Prabhu and two top guns from corporate India, Sanjeev Goenka and Adi Godre, join in with their budget view as well. Keep it with ET Now. It's prime time on Budget Day.
So good to be back with you once again on the budget debate, and joining us are two tall corporates, Sanjeev Goenka and Adi Godrej. Let's begin with you, Mr. Godrej. Then your quick take on the budget, a budget for Bharat or a budget for elections?
Well, I think it's some of the aspects of the budget were good, some emphasis were good, and some of the things which has been announced, especially for rural India, although it will be helpful for the political situation also, I think it will be good for the country's economy. So I think consumer demand in rural areas will improve. Rural companies such as Godrej Agrovet, which is entirely sells to rural India, will do well. So I think that's a good move and I welcome it. But what I found disappointing with the corporate tax rate was not reduced. US has reduced corporate tax rates, UK has reduced. We are one of the highest corporate tax paying countries in the world now, and he has only reduced it for companies under 250 crores. These are only small and medium enterprises, and we need to make Indian companies competitive. Foreign investment will shy away. So I was disappointed that what he had promised 3 years ago has not been done.
All right. Sanjeev Goenka, comment on that. Mr. Godrej says that he's disappointed that corporate tax has not been reduced for all of corporate India. It was promised by the finance minister in his budget 3 years ago, and he's not kept his word. So obviously, the window of opportunity is now gone. And now the next government will have to look at this afresh on whether large corporates with a turnover of over 250 crores also deserve to pay corporate tax at 25%. Now, we were speaking to Niti Aayog Vice Chairman who said that the effective corporate tax rate for large companies is as it is 22%, and they don't really need one. Your view?
No, I don't think he's gone back on his promise. What he had said in his first budget is that by the year 2019, he expects to reduce corporate taxes by 25%. We are still only in 2018. And I think he is moving steadily towards that. So he's now exempt almost all MSMEs. And now what remains is the large corporates.
All right, Sanjeev Goenka and Adi Godrej, hold your horses there because I've got a very, very special guest. Suresh Prabhu, Minister of Commerce and Industry in the Government of India, joining us right here on ET Now. Thank you very much, Mr. Prabhu, for being with us. This really has been a long day for both you and your cabinet colleagues. But thanks for sparing time and speaking to us this evening. I will start with something that pertains you and your ministry. The principal opposition, the Congress party, lashed out at the government and at the budget, saying that the Davos speech of Prime Minister Modi, talking about globalization, talking about an open market, has been done away with in less than a week's time. They were obviously citing the import duties that have gone across the board for multiple products, and that is being seen as a sign of protectionism. How are you going to defend your position on that?
I think we are missing the entire big picture about what we mean by open economy. When we talk about open economy, if all the open economies of the world, are you mean to say that there are no duty at all? And therefore, having a custom duty is not the only criteria to decide whether the economy is open or not. Our economy, we are now allowed the foreign direct investment into virtually all sectors of economy. In terms of portfolio investment, we are allowing more or less all the sovereign wealth funds of the world to come and invest in India. We are allowing and we are removing sectoral caps on most of the sectors where the investments could be made. We are allowing the foreign companies as well as others to operate in India in virtually all activities, economic activities, barring very, very few. In this budget itself, we have said that for defense manufacturing and other areas as well, we are opening up the sector for procurement will be done in a different manner. Now, what happens is, in India, there is a huge number of telephone subscribers, more than 1 billion. Now, these subscribers, some of them are using even more than one mobile phone. The demand for mobile phone is going to rise. In India, we already decided that we are going to move towards a completely digital platforms for transacting all kinds of economic transactions as well as dealings with the government. So we are moving in a e-commerce way in a big way. At the same time, we are also going in the e-governance way in a big way. For that, the mobile will play a very crucial role because most of the operations will happen through that, and therefore the Prime Minister is talking about Jan Dhan, Aadhaar and
mobile. So this JAM Trinity is actually going to drive the future governance as well as economic activities in India. Now in this context, if you look at it, manufacturing in India is a must. That is what will create jobs, because we keep asking questions whether jobs are going to come. We have a big Make in India program. So is it wrong in saying that those who manufacture in India will be preferred in terms of their capabilities, will be protected against the stuff imported which is completely, nothing is value added in India. So anything, how is it against what Prime Minister said in Davos? What he said in Davos is, we don't want protectionism. This is not a protectionism. We are negotiating trade agreements with several countries of the world.
Okay.
Why are we negotiating that? We are a strong proponents of WTO.
Right.
What does it mean? Is it not a sign that we are open, we are really not trying to put protectionism?
Indeed.
So what it only means is that doesn't mean that, every time now and then, for example, we find that there are certain unwarranted, unreasonable trade practices which are followed by some countries in the world. The WTO itself, which provides for certain measures to be taken. So we are fully compliant with international laws. We are trying to do something right now in this case as well, which is in compliance with our national programs of the country.
Sure.
We are not violating any treaties. How is it against the spirit?
Absolutely. Mr. Prabhu, I get your point on board that this is not anti-market and this is not anti-competitive. Point taken. The second point, of course, is on exports, and the finance minister has budgeted for export growth of over 15%. I'm trying to understand from you, what are the levers to make that happen? Are you just betting on the tailwind of the global economic recovery? Is that alone enough to ensure that export growth, shoots up to over 15% through the next financial year?
So I think he has talked about the current year. But anyway, let me explain to you properly. Exports in the world had slowed down considerably post 2008. Global trade had contracted significantly. The rate of growth of world economy was higher than the global growth rate of global trade, which was not the case earlier. The global trade is to be rising at a higher rate than the global GDP growth. So this is the changing dynamics of it. Now, we are positioning ourselves in a way that we will make sure that our merchandise will get exported to newer markets with newer products. It's not just going to happen in a hurry. For that, we are preparing a strategy, creating market strategy, creating market research, and based on that, we'll decide what products should be marketed and where they should go, what pricing should happen, everything else. At the same time, we are using our multilateral platforms as well as bilateral forums which are available to us to get entry into the overseas market. That is one part. The second important part is the exports, as we call them, are not just merchandise exports. The services exports in India are rising at a higher rate than merchandise exports. This is a new phenomena. And as it is, this helps India because over 2/3 of India's GDP come from services. Services creates more jobs than the merchandise exports. Another thing, and that's something a very broader issue, is that when you make services export, you are not actually exporting anything out of the country, except the service itself is invisible. So what you really do is that you are earning something for not necessarily selling something in return. When you export merchandise, you export materials, you export something else. You do agriculture export, you export virtual water. So therefore, this is a very interesting phenomena that is going in the world, and we are targeting ourselves to take advantage of it so that we can create more employment. We are certainly creating a strategy for merchandise export independently, and as I said, when our GDP will be $5 trillion, at least 40% of that will be driven by the global trade. That means 2 trillion, of which $1 trillion must be exports, of which services will be a substantial part, but also the merchant export will rise. So therefore, rising export is an important issue because that gives us foreign exchange, that gives us access to overseas market, that creates our strategic footprint in other markets, but that also creates employment back home, creates economic activity back home, which boosts the GDP of the country. So therefore, our strategy is very clear. We want to have a more and more exports rising, but as I said, the changing profile of export, you must keep in mind. We are trying to target new markets. As you are saying that Prime Minister said in Brussels, in Davos, which you are explaining just now, you are asking me, what you are referring to in this context is that protectionism prevents countries like India to grow faster. We have been already a part of WTO framework for a long time, and before that we are a member of GATT, the founding member of GATT. which is precursor to WTO. So we have been always a proponent of this idea. But some countries eventually having benefited from it now trying to put borders around them and try to say that we will not allow certain things to happen. This is not in the interest, not in the spirit of the global trade. So that's what was the meaning of that. But I can tell you something, we have a clear-cut focus on exports. Strategy is getting completely fixed. We are working on a proper ideas. We are trying to talk to all export promotion organizations. We are going to market. In fact, I am going to lead delegation to several countries to ensure that our people get market. I will give an example.
No.
The German Jewelry Export Promotion Council, we had a meeting on the gold alone. The gold jewelry can have a huge market globally. Why? Because we have large number of people, almost in every village there are people who can do jewelry with handmade skills. Now, handmade jewelry has a higher value. Our diamond exports are increased, but our jewelry exports are not kept pace at all. So we had a gold summit recently organized, and now we are working on that. Just imagine the downstream benefit of this. So we are working on it. In fact, I have been working, I have a meeting almost every day. We are having meeting with different sectors.
Mr. Prabhu, I have no doubt about
strategy, each one of them. The exports will be made by them. We will be the providers of support. Also, I must remind you of a midterm foreign trade review that we took recently, in which clear strategy has been given. And luckily it was welcomed by each and everyone without an exception because of the clear-cut, unambiguous, articulated strategy that we have mentioned there. So we are looking forward to working on exports. So you are absolutely right. Export is our strategy. Export is our priority. Export is something which we are preoccupied with. We'll make it happen.
There is no doubt that export is in safe hands with somebody like you spearheading this. So thank you very much for giving that elaborate answer. But I have to turn focus and ask you a question that pertains to your constituents. 9 out of 10 corporates who've been on ET now, and we are talking about some really big ones, from Deepak Parakh to KIran Mazumdar Shaw and everyone like that, have expressed disappointment that corporate tax rates have not been cut for the large corporates. The finance minister had promised to do that in its 2015 budget. He hasn't walked the talk. In hindsight, do you believe you haven't been able to keep your word? You haven't been able to keep your promise for the large corporates? Yes, you've done that for the smaller ones, but I'm really talking about the top guns.
Then which promise?
The corporate tax rate cuts, sir.
On? You know, see, basically, you must try to understand that our economy is undergoing a very significant structural changes. We are increasing the tax base in the country. More people pay tax, obviously the rate of tax can come down. More and more compliance happens, it will actually bring down the individual tax burden in a very significant way. This year already the finance minister has given you the numbers as to how many more people have now started filing returns. There has been a more and more number of assessees which are happening in the country, so this has happened. In this case, he has done very significantly is that large number of companies, almost he gave the number I think 90% plus, are the companies which will be benefiting from the new regime that he has introduced, in which more or less all the SME sector will be subjected to lower taxation, which would mean that their tax burden will go down, therefore they will have a savings with them, which in turn they can invest back into their businesses, which will increase economic activity, create more jobs and also help them to grow more. So this is something which is happening. Now just imagine, you cannot accomplish everything in one go. So this is something which is happening, that individual tax base is rising. Corporate tax, we are working with the large number of SMEs, which are the large number of companies anyway. So I think over a period of time, what finance minister has been saying will definitely happen, but you cannot expect everything to happen in one budget or in just one time frame. It is something which is happening in the long term basis. You are seeing now that upswing in the economy would benefit the corporate sector significantly. Corporate sector will be, the earnings will go up, you will see the corporate results as they come, and you will see that the top line is improving, bottom line is improving, and when that happens, obviously corporates will have more money. And why will that happen? Because of public spending that we are making, and the number we have seen, the phenomenal growth in the infrastructure investment in India, which is like a public spending, the phenomenal growth increase in the public expenditure on healthcare and education, which again will create more opportunities for businesses. The infrastructure on the village level, the level like rural roads and everything else, which creates penetration into new rural markets, which will help FMCGs and others. So therefore, corporates are going to benefit immensely by this. Okay. So therefore, on one hand, not just having tax which may save some amount certainly, but more importantly is increasing the size of market, increasing more economic opportunities, making them to grow faster. That is what is more important. That is what Finance Minister is doing. So I think we realize that what is necessary to be done, but can it be done only in 1 year or in a very short span of time of few years or something? We must have a roadmap in which we will definitely make everything happen as we go along. But first things first, let's work on something which will help not only corporate sector but also economy as a whole. And when the economy as a whole gains, obviously each of the corporate will definitely gain into that.
All right. We'll leave it at that. You're essentially saying corporate India needs to be patient. It will happen, but will happen in a calibrated manner. Mr. Suresh Prabhu, Commerce and Industry Minister of the Union Government, can't thank you enough for taking time and joining us with your perspective as always right here on Niti. Now, we're going to step into a short break, but on the other side is a debate you cannot afford to miss. It's the biggest budget debate. Jayant Sinha, Shashi Tharoor, Yogendra Yadav and Swaminathan Iyer on the biggest budget debate on Indian television on Budget Day. We're back in a moment on Niti Now.
It truly is unmissable. We cannot afford to miss this one.